Hi everyone, this is the 24th of January 2020. Now we are a little more than a week away from the budget, and what we've ended up getting is a pullback ahead of the budget, and that is some sort of a knee-jerk reaction, or rather I should say a step back, because people have been betting on the optimism of measures being taken in the budget since the month of December, and that has happened because at that point of time the RBI made it very clear that apart from monetary policy, it was in the interest of the economy that the government really steps in. So I think that raised hopes, and I've shown that video at least twice now, and those hopes have led to a strong belief that somewhere the government is going to be doing a lot more in this budget than we would really have believed given their fiscal position. But this is also a global movement towards fiscal policy. I don't think many governments have already reached there, but the talks are on. We've already done a bit last year in terms of the tax breaks, but now the expectations are high that in next year's budget there will be more done on the other side, especially related to the infrastructure side of the problem, so that demand picks up there and many other sectors which have been underperforming start picking up. So on those hopes, I think we are now a week away and going to be looking at that. But as the market has already rallied on those hopes, I think the pullback is essentially a correction or profit booking ahead of the event, because people really don't know what will actually be there. The hope built in is leading to an over positioning maybe by short-term traders that may have caused that reaction. But what we are also seeing is the broad market remains very, very strong. The mid and small cap stocks not really giving up. In fact, the mid cap index made a new high again today. And so that broad market strength might continue to give you hope that the overall trend remains intact. What I'm not sure of is whether the knee-jerk reaction we've seen so far is complete, or whether we have some more downside left over the next few days before we actually get a pickup in the market again. So it's possible that happens. In fact, I would have expected a deeper reaction even from the US market, because the US market has actually reached a point where the CBOE put call ratio hit a 6-year high a while back. And also over the last weekend, we had the daily sentiment index going to 93% on both the Nasdaq and the S&P, which means 93% of traders who were polled were actually bullish on that market. And so it's had a pretty long run, I think more than 2 months of one-sided up move. It's not even moved below the 20-day moving average since the last Fed policy, and a lot of it has happened because even though you have very weak data coming out of the US, and probably some of the poorest data on GDP will come out later this month, and earnings growth also are likely to be flat. The reason has been the Fed putting in more than $500 billion through the repo market. So I think that's been eyed, and in between it appears they stopped, but reports I'm seeing is last week that's picked up again. So the stimulus which is coming, at least from in the form of liquidity globally, has been one of the reasons behind the market tick up, and the most direct impact of that should have been on driving down the dollar. Now we've actually seen the dollar peak in the month of September, and it sold off quite a bit, but it's still not broken the broad range that it has been in the last 1 year. So that final confirmation missing. The dollar in the short term has actually bounced back over the last week or two, and so that may be reason why it's again putting some pressure. But then many markets, like I said, have rallied, especially the emerging markets, and there's room for them to pull back a bit before they continue higher. So we are at the edge in terms of where the dollar is, whether it turns down from here again, or it's going to break out and something changes in terms of the wave structure, or is it going to just remain in this broad range for a longer period of time, is something we'll come to know. In the meantime, we had a decent rally in some of the commodities, especially copper. Many others which had done well in October actually sold off recently, and we've been waiting for that pickup to actually show up again. And in the meantime, oil has had the biggest reaction. So we know that longer term, oil, like most of the commodities, have an inverse relationship with the dollar, and that's why we actually watch out for that. And in terms of the trade weighted dollar, as you see in this chart from Hedgeye, the DXY is actually at the highest point, and therefore there's room for it to start turning lower. The question is really how soon and how fast. In the meantime, oil, because it had been pumped up by all the issues around Iran, and prior to that the Aramco attacks, both of those drove it to closer to the $60 mark, but all those gains have now been given up. That news flow has cooled off, and prices actually broke a rising channel, so the trend did not continue into a larger impulse and ended up being corrective. and so I think we are still forming a broader triangle pattern in the oil price, and the lower end is almost reached, which is close to around 54.60. So we came close to the lower end yesterday, might have almost touched it. Will we break it or not? We'll be watching for the next couple of days, because oil remains an important part. But in the meantime, falling oil prices haven't really had a positive impact on markets the way they had a negative impact when oil prices actually went up. So that's the funny thing. And what people don't think about is when they're looking at oil, and I think I've spent a lot of time on this, is that oil prices tend to be more directly correlated with financial markets, especially emerging markets, because they reflect growth. And therefore, weakness in the oil market has often been associated with a rising dollar and weakness in various economies as well. So we would really like to see pick up in oil itself if demand is picking up. But right now, none of the data coming out of anywhere is really showing demand, which is why the entire pressure comes back to governments stepping in and providing these policy stimulus for markets. In the meantime, will Nifty have one more leg down? The major support would be closer to around 12,000, followed by 11,830. Which of those will be tested is what we're going to be watching in the next week. I have a couple of indicators that are coming close to oversold, and when they do, then I'll probably highlight them in my insider posts, and that's what I'll be watching for over the next couple of days, whether we get an extreme combination of a couple of indicators that can tell us that we've got a low. In terms of the bank Nifty also, it reached the minimum requirement, which is the lower end of the falling channel. The only issue is, will there be a fifth wave in wave C of its decline, or will it or is it complete as a complex correction? Again, like I said, I'll give it a day or two to see that. Probably by early next week we should have a clearer view in terms of what the index is doing, and if there's any downside that may have completed, and then we can start looking at from where to start building on the next move higher. Now, sometimes when the market pulls back ahead of the budget, it's possible that the move actually, because the budget itself has acted as a turn date so many times that when you've had a major sell-off like in 2016, you got the final bottom in the market on budget day, and at the same time there are few occasions way back in the 90s and a couple of others where the market actually consolidates or corrects ahead of the budget and then takes off afterwards as news flow turns out to be positive. So which of those patterns we'll follow? So far our pullback gives the sense that you're pulling back ahead of expectations, but if expectations are not met, that would probably be the only huge negative, I should say, not even small, because that stimulus to the broad economy, I think, is what the market is pricing in, and if it doesn't come through, then it would lead to probably deeper sell-off. Otherwise, that may be what might drive the markets back again to new highs post the budget announcements. So that's all in this update for today. Thank you.